Working for yourself, the ugly. Unfortunately, the bad aspects of self employment discussed above do not end the litany of potential woes. Being self employed can, in some respects, be downright ugly. Double Social Security Medicare tax. For many, the ugliest and most unfair thing about being self employed is that you must pay twice as much Social Security and medical taxes as employees. Employees pay 7.65% tax on their salaries, up to a salary amount capped by the Social Security tax limit, 128,400 in 2018. And employers pay a matching amount. In contrast, self employed people must pay the entire tax themselves. A 12.4% Social Security tax up to the annual ceiling, and a 2.9% Medicare tax on all their income. More if their income is over 200,000, 250,000, as discussed below. This amounts to a whopping 15.3% tax on their income up to the Social Security ceiling. This is in addition to federal and state income taxes. In practice, the Social Security Medicare tax comes to less than 15.3% because of certain deductions. But it still takes a big bite out of what you earn from self-employment. As mentioned above, self-employed people must pay Medicare tax on their net self-employment income over the Social Security ceiling. This is a 2.9% tax on income from $128,400 to $200,000 in net self employment income for singles, and $128,400 to $250,000 for married couples filing jointly. High earners will owe a 3.8% tax on all net self employment income that exceeds these amounts. Personal liability for debts. Employees are not liable for the debts incurred by their employers. An employee may lose his or her job if the employer's business fails, but will owe nothing to the employer's creditors. This is not necessarily the case when you're self employed. If you're a sole proprietor or partner in a partnership, you are personally liable for your business debts. You could lose much of what you own if your business fails. However, There are ways to decrease your personal exposure, such as obtaining insurance, as discussed in a later chapter. Deadbeat clients. Ugliest of all, you could do lots of business and still fail to earn a living. It can be difficult to get clients to pay you on time or at all. When you're self employed, you bear the risk of loss from deadbeat clients. The government is not going to help you collect on your clients' unpaid bills. Clients who pay late or do not pay at all have driven some self employed people back to the ranks of the wage slaves. However, there are many strategies you can use to help alleviate payment problems as discussed in later chapters. How this book will help you succeed at self employment. Despite the challenges, millions of people are happily self employed today. Indeed, most successfully self employed individuals would never go back to wage slavery. The purpose of this book is to help you achieve all the financial and personal benefits of working for yourself. We'll show you how to make what's good about self employment even better, make the bad aspects less daunting, and hopefully make the ugly aspects a little more attractive. Spending a few hours now to learn the legal, tax, and practical nuts and bolts of self employment will save you countless headaches, not to mention substantial time and money later on. Don't worry, the mere fact that you've chosen to take the time and trouble to read this book shows that you have what it takes to be successful working for yourself. As a self employed person, most of the important decisions you have to make is what is one of the most important decisions you have to make is what legal form your business will take. There are several alternatives, and the form you choose will have a big impact on how you're taxed. Whether you'll be liable for your business's debts, and how the IRS and state auditors will treat you. There are four main business forms that we'll discuss in this chapter: sole proprietorship, corporation, partnership, and limited liability company. If you own your business alone, you need not be concerned about partnerships. This business form requires two or more owners. If, like most self-employed workers, you're running a one-person business, your choice is between sole proprietorship, corporation, or limited liability company. Don't worry too much about making the wrong decision. Your initial choice about how to organize your business is not set in stone. You can always switch to another legal form later. It's common, for example, for self employed people to start as sole proprietors, then incorporate or form LLCs later when they become better established and make substantial income. Sole proprietorships. A sole proprietorship is a one owner business. It is by far the cheapest and easiest legal form for organizing your business. You do not have to get permission from the government to or pay any fees to be a sole proprietor, except perhaps for a fictitious business name, business name statement, or business license. See Chapter 5. You just start doing business. You don't incorporate or have a partner. You are automatically a sole proprietor. If you're already running a one person business and have it incorporated or formed an LLC, you're a sole proprietor. The vast majority of self employed people are sole proprietors. According to the U.S. Census Bureau, over 86% of all businesses without employees are sole proprietorships. Most sole proprietors run small operations, but a sole proprietor can hire employees and other contractors too. Indeed, some one owner businesses are large corporations with many employees. If if you're already running a one person business or thinking about starting one, the sole proprietorship form is a perfectly good choice. Ways to organize your business. Type of organization, sole proprietorship. Main advantages: simple and inexpensive to create and operate. Owner reports profit or loss on personal tax return. Main disadvantages: owner personally liable for business debts, not a separate legal entity. C corporation. Main advantages: clients have less risk from government audits. Owners have limited personal liability for business debts. Have limited personal liability for business debts. Owners can deduct fringe benefits as business expenses. Owners can split corporate profit among owners and corporation for a lower overall tax bill. Okay. Main disadvantages for C corporation: more expensive to create and operate than sole proprietorship or partnership. Double taxation threat because the corporation is a separate taxable entity. No beneficial employment tax treatment. Okay. S corporation, main advantages: clients have less risk um, from government audits. Okay. Owners have limited personal liability for business debts. Owners have limited personal liability from business debts. Owners can save employment taxes by distributions instead of salary. Okay. Okay. Main disadvantages: S corporation main disadvantages: more expensive to create and operate than sole proprietorship or partnership. Fringe benefits for shareholders are limited. Okay, partnership. Main advantages: simple and inexpensive to create and operate. Owners report profit and loss on personal tax returns. Partnership. Main disadvantages: owners personally liable for business debts. Two or more owners required. No beneficial employment tax treatment. Limited liability company. Main advantages: owners have limited liability for business debts if they participate in management. Okay. Profit and loss can be allocated differently than ownership interests. Limited liability company. Main disadvantages: more expensive to create and operate than sole proprietorship or partnership. No beneficial employment tax treatment. Adapted from Legal Guide for Starting and Running a Small Business by Fred S. Steingold. Nolo. Tax concerns. When you're a sole proprietor, you and your business are one and the same for tax purposes. You don't pay taxes or file tax returns separately for your sole proprietorship. Instead, you must report the income you earn or losses you incur on your own personal tax return, IRS Form 1040. If you earn a profit, you add the money to any other income you have, such as interest income or your spouse's income if you're married and file a joint tax return. That becomes the total that is taxed. If you incur a loss, you can use it to offset income from other sources. Although you are taxed on your total income regardless of its source, the IRS also wants to know about the profitability of your business. To show whether you have a profit or loss To show whether you have a profit or loss from your sole proprietorship, you must file IRS Schedule C, profit or loss from business, with your tax return. On this form, you list all your business income and deductible expenses. See Chapter 9. If you have more than one business, you must file a separate Schedule C for each. Sole proprietors are not employees of their proprietorships. They are business owners. Their businesses don't pay payroll taxes on a sole proprietor's income or withhold income tax. However, sole proprietors do have to pay self employment taxes, that is, Social Security and Medicare taxes, on their net self employment income. These taxes These taxes must be paid 4 times a year, along with income taxes, in the form of estimated taxes. Chapter 10 and 11 cover this in more detail. Hiring firms don't withhold any taxes from a sole proprietor's compensation, but any firm that pays a sole proprietor $600 or more in a year by cash or check must file Form 1099 MISC to report the payment to the IRS. Okay. Example: Annie operates a consulting business as a sole proprietor. She must report all the income she receives from her clients to her individual tax return, IRS Form 1040, and file Schedule C. She need not file a separate return for her business. In one recent year, she earned $50,000 from consulting and had $15,000 in business expenses, leaving a net business income of 30 okay $35,000. She reports her gross profits from consulting and her business expenses on Schedule C. She must add her $35,000 profit to any other income she has and report the total on her Form 1040. She must pay both income and self-employment taxes on this profit. Ándale pues. All right. All right. All right. All right. All right. All right. Okay.